February 12th, 2026. Let's go over the trades I took today and talk about the market. Now, we had a very definite, scary selling day today. I say scary just to be hyperbolic. It's not scary. Nothing's scary. You can make money whichever way it's going, up or down, doesn't matter. And it was a very selling heavy day. You'll look at this momentum and you'll see it for yourself. 4 market days ago, we had a pivot point where the buying pressure was starting to fight back. We were losing selling momentum. And today, we had the opposite. We had clarification that this sell-off is likely not over yet. There's still more selling to do. So altogether, if we're in the red zone, we have a heavy bias on selling short opportunities. If we're in the green zone, we have a bias towards going long. But the MACD histogram, which shows us the momentum, the direction of it and how it's moving and how aggressively it's moving, its attitude, the breaks of levels and the breaks of variances, those matter too. So today, we had a continuation of selling pressure on a daily momentum. Now let's get into the trades I took today. I am trying a new strategy now. Same strategy, different time frame. I'm using the 3-minute chart and the 30-minute chart, with the 2-hour chart being a 2-hour ads context, and then we go with the 30-minute current. 30-minute MACD momentum is a very strong force. Very strong force. So if this momentum is aligning with this momentum, which is aligning with this momentum, we have a triple fractal. We have 3 time frames, 3 levels of frequency with regards to momentum, all aligning and converging. And this increases the chances, this increases probability. This is how you find edge. We're going to go over the first trade I took today. First trade happened right here. I took this trade because the same reason I always do. We had an alignment right off the bat. Okay, our 2-hour. At this point, the 2-hour hadn't sold off yet, so the 2-hour was just looking like this a little bit. So not really much from the 2-hour. The 30-minute regular hours and the 30-minute extended hours was showing weakness. Definitely was showing weakness. And we're going to go over the pre-market action real quick. What happened during the pre-market? We sold off, hit this pivot point, hit this pre-market low. We retraced all the way back up to yesterday's highs. What do you know? Pre-market, sell off, hit a point, we retrace all the way back to yesterday's highs. Interesting. Right as the market opens, what do we see? We see a buying candle, followed by a selling candle, followed by 2 more buying candles. But look at the MACD. Is the MACD in the green? No, it's in the red. There's force fighting against upward moves. And then we get this candle. A big, fat, selling candle. But the volume confluence was there. It was there, honestly. I could have taken this trade earlier. Let's look at the volume confluence that aligned right here on this candle, okay? We get the MACD pops down, aligning with selling, aligning with going on a short trade. You don't want to take it when it's going up. That doesn't make any sense. It needs to be going with the trade. But this volume bar is not greater than the previous 3. There's not a 2x3 occurring here. There's no volume confluence that allows me to take a trade. So I was wrong. My bad. This next candle where I entered by this yellow line, anytime you see a yellow line, that means I took a trade. This next candle was aligned. Look, we have a volume confluence, 2x3, 3 candles, at least 2 of them are aligned with the direction of the trade, and the last one is greater than the first one. It's also a power volume bar greater than the previous 3. And we're ticking down, we're going with the selling. So I took the trade right here. I entered the trade at the close of the candle, stop loss slightly above, sold around 80% of my position at this first level here, which is about a 2-to-1. Roughly a 2-to-1. And then I allowed the remainder of my position to continue running. JK, I didn't. I I messed up and I exited the position accidentally, ruining that trade. So I took the profit at the right spot, but then I accidentally exited the position incorrectly. It was a mistake. Okay, we retrace. We're dancing with the pre-market lows. We retrace back up. We don't even touch VWAP. And as we get close to VWAP, what do you see? The MACD flips back down to the short side. We're aligning with the position of the 30-minute. This is what determines, this is a gate. When the gate's open, we can take trades. If the gate's not open, we're not taking trades. Right now, this gate is open to the downside. MACD's going up. That's not good. And why would we trade when it's going up? If this is going down, boom, ticks down. Now we're aligned. We're beginning the alignment. But you don't just take the trade because that happens. You have to wait for a volume confluence. And what do we see? A volume bar greater than the previous three, just barely, but it is. A volume bar greater than the previous three, aligned with the direction of the trade. Red for shorts, green for longs. That, my friends, is an entry. I entered here at the close of the candle. Stop loss slightly above. Take profit at that first level. And the rest is history. I allowed the runners to run for the rest of the day. I sold the remainder of my position right here. My God. What a win. We're going to the next trade. Next trade was in INTC, Intel. The first one was a loss. And then the second one was a huge win. I took the trade here. Why? We just rejected off of VWAP. That's that purple line. We just rejected off of it. We're now penetrating through pre-market lows. We get a volume confluence. We're on the right side of the MACD. That is my setup. I took the trade. I lost the trade. And that's fine. That's a good thing. When you do the trade, when you do the setup and you lose, that's a good thing. Just don't break your rules. Don't bend your rules. Don't change your rules. Follow your rules. And if you win or lose, it's a good thing. Losing is not a bad thing. You want to know why trading is hard? It's because if you tell most human beings that losing is not a bad thing, they won't understand. That loss led me to this part right here where we're breaking this wedge. I'm seeing this wedge form. We're breaking the wedge. We're on the right side of the MACD. We get another volume confluence. I took the trade. Enter the trade at the close of the candle. Stop loss slightly above. Take profit at the first level. And you allow the trade to unfold so you can capture more and more profits. I moved my stop loss to this level right here. After it retraced down all the way, I moved my stop loss here. So when it bounced back up, hit stop loss, got me out for more and more profits. We got two more trades to go over. One more trade to go over. The last trade of the day was in Apple. I took this trade because the market was selling off. This is so important to understand. Listen to this. Listen closely to what I'm about to tell you. The market was selling off at this time. Watch this. The time is 9:45 when I took this trade, okay? 9:45. What is the market doing at 9:45? Let's see. At 9:45, the market is in a massive sell-off. That's what's happening at 9:45. But if you look at Apple, what was happening right before this? The market's selling off. What is Apple doing? Apple is fighting the current. Apple is fighting the overall sell-off. You can see this clearly when you just look at the MACD. Fighting. And now it starts to slip. And when it gives way, when the momentum starts to shift, especially if you're aligned with your higher time frames, that's when the odds start to stack in your favor. It's not a 50-50 after that point. Entry at the close of this candle, because we had a volume confluence occur. That's the only reason we entered the trade, is we had a volume confluence aligned with all of this other stuff. Enter at the close of the candle, stop loss slightly above, take profit at that first level there, and allow the remainder of the trade to continue going on. I took profit at the right level, and you know where I sold the rest of my position? I sold the rest of my position right here. I put my stop loss to this red level and it never touched it. It came down, never touched it, exited here for a huge win. So before I end this episode, I have gone through the rite of passage twice now, which is you have to go through 16 trades in a row where you can't change anything about your rules. You have to execute your rules and your plan flawlessly, and you have to do that 16 trades in a row. And if you mess up at any point, you have to restart the whole process. It's called a rite of passage. I've done it twice now. I'm going for my third rite of passage right now, and I am on trade number 6 out of 16. And this time around, I used the 1 minute chart on the first rite of passage, and then I used the 5 minute chart on the second rite of passage. And for this rite of passage, number 3, I'm using the 3 minute chart. And let me tell you something. I love the 3 minute chart. I'm not trying to be biased. I love the 3 minute chart. How smooth it is. How the volume confluences align with reality. So with all that being said, see you in the next one.